Okay, so a huge name in the construction game, Vulcan Materials, just dropped their latest earnings report, and whoa, it really shook things up. We're going to dig into the numbers today and figure out what's really going on behind those big, flashy headlines. And it all kicked off with this one number. Seriously, the moment Vulcan put out their Q4 earnings, the stock just plummeted. We're talking a drop of over 8%. Now, a move like that, it makes everybody sit up and pay attention. So the big question is, what on earth happened? All right, so here's the simple headline reason why everyone freaked out. The market, right? They were expecting earnings per share of about $2.11. What did Vulcan deliver? Just $1.70. Ouch. And it wasn't just that. They also missed their revenue target. So a clear miss on both of the big numbers. And in the world of quarterly earnings, that is a textbook recipe for a big sell-off. So at first glance, this looks like a super classic story, right? Company doesn't hit its numbers, stock goes down. Simple. But is that really what's going on here? Because as we're about to find out, that one single quarter, it doesn't even come close to telling the whole story. And this is where it gets interesting. See, when you stop looking at just that one little slice of time, that one quarter, and you zoom out to see the entire year, the whole picture just completely flips. The story for the full year of 2025 is, well, it's actually incredibly strong. I mean, just listen to what the CEO, Ronnie Pruitt, had to say. He called it an outstanding safety year and a year of robust growth in earnings and cash generation. Now, does that sound like a company whose stock should be dropping 8%? Doesn't really add up, does it? So let's look at the numbers that have him sounding so confident. Okay, first up, Adjusted EBITDA. This is a really key way to measure how profitable a company is. For the whole year, it was up 13%. That's huge. It hit a whopping $2.3 billion. Now, that is not the sign of a company that's struggling. That's a company that is absolutely firing on all cylinders. And believe it or not, the story gets even better when we look at the cash. Their operating cash flow just surged, up almost 29%. What that really means is this company isn't just profitable in some spreadsheet. Nope, it's generating a tidal wave of actual, real cash from its day-to-day business. And this next number, I love this one because it really shows you how efficient they are. For every single ton of aggregates, the crushed stone, sand, and gravel that's the bread and butter of their business, for every ton they sold, they made $11.33 in cash gross profit. That's a 7% jump from the year before. So, get this. They're not just selling more stuff, they're making more money on every single bit of it. So it's pretty clear, right? The full year was a massive success. But that brings us to the really crucial point. How? How in the world did they pull this off, especially when things like residential construction were kind of weak? All right, let's go inside the engine room, so to speak, and see how they built this success. Because this was no accident. It all comes down to this really smart internal strategy they have of just focusing on the things they can actually control, no matter what crazy stuff is happening in the wider market. And yeah, that strategy actually has a name. They call it the Vulcan Way of Operating, or VWO for short. The easiest way to think about it is like their internal playbook. It's this whole system of tools and disciplines that's laser-focused on just two things. One, making their plants run as efficiently as humanly possible. And two, keeping a super tight lid on costs. And boy, did this system deliver in 2025. I mean, it's running in over 120 of their plants. And get this, even with all the inflation we've seen, they managed to keep their cash cost increases for aggregates below 2% for the entire year. That's incredible discipline. And it's a huge reason why their profit margins got better. And it's all being juiced up by smart investments in both technology and their people. Okay, so that's the story of 2025, right? A really tough Q4 headline that was kind of hiding an amazing year of just rock-solid operational excellence. But what about the future? What's next? Well, let's turn to their outlook for 2026, because this is where it gets really, really interesting. So here it is, the company's official guidance. This is basically their forecast for the year ahead. And you can see they are projecting more growth. They expect that Adjusted EBITDA number to climb even higher, somewhere between 2.4 and 2.6 billion. They see more stuff getting shipped out the door, and, this is super important, they plan on raising prices by another 4 to 6%. So what this guidance is really telling us is that they don't just see growth, they see another year of compounding growth. They're building on the huge success of 2025. But why are they so confident? Where is all this growth actually supposed to come from? Well, the answer, it turns out, lies in two absolutely massive long-term trends that are creating just this incredible demand for exactly what Vulcan sells. And what are they? Two words: highways and data centers. Okay, check this out. This chart is just wow. It shows the growth in highway contract awards over the past year. Think of that as the pipeline for future work. In the specific markets where Vulcan operates, that pipeline is up 24%. Now, compare that to the rest of the US, where it actually fell by 7%. I mean, it's not even close. Vulcan is just perfectly positioned. Right place, right time. And a huge reason for this is all that government infrastructure money that's flowing. You've probably heard of the Infrastructure Investment and Jobs Act. Well, it's pouring billions into these kinds of projects. But here is the absolute kicker. More than half of that money hasn't even been spent yet. That's not just a trend, that's like a guaranteed tailwind of demand that's going to last for years. Okay, so that's highways. But now we get to the second major driver, and honestly, this one might be even bigger. We're talking about the absolute explosion in data center construction, and it is all being fueled by the AI boom. I mean, just take a look at these maps. It's kind of nuts. They show all the data center projects happening in the US. The map on the left shows what's already being built right now. The one on the right, that's what's been announced but hasn't even started yet. The sheer scale of this build-out, it's almost hard to wrap your head around. Let's put some hard numbers on those maps because they're staggering. Right now, there's 150 million square feet of data center space under construction. But wait, there's nearly 450 million more square feet that's already been announced. It's just mind-boggling. But here is the absolute killer stat. Over 70% of all of this activity is happening within a 30-mile radius of a Vulcan facility. They are literally right next door to all of this demand, perfectly positioned to supply these gigantic projects. So let's just tie this all together, shall we? You've got the stock market freaking out over the headlines from one single tough quarter. But the real story? The one that's happening underneath the surface? It's a story of a company that is incredibly strong operationally, and it's running headfirst into this massive tidal wave of long-term demand. And all of this, from that confusing quarterly miss all the way to this insane data center boom, it all leads us to one final, really crucial question. So, when you have a business that is this disciplined, with these enormous tailwinds coming from both infrastructure and the AI revolution, you have to ask, was that big 8% stock drop just a bump in the road? A momentary stumble? When you look at all the data we just went through, it really makes you think, doesn't it?